Short-term rental activity in the Kansas City region generated an estimated $624 million in total economic output, supported approximately 4,000 jobs, and produced $157 million in labor income in 2025. How do we know this? KCRAR commissioned an in-depth study on short-term rentals in our region. In addition to economic impact, this study shares new data related to impact on housing affordability, public sentiment, and more. And as a KCRAR member, this information is at your disposal at kcrar.com/advocacy. But we're going to dive into it today with James Toy, KCRAR SVP of Government Affairs. I'm Alex Gehring. This is Kansas City Real Talk. James Toy, you were last on the podcast in February. It hadn't been a super long time, but it is so good to see you. How are you doing today?
Hey, I'm doing great, Alex. Thank you so much for having me. It's funny. It feels like it's been so much longer. I had just started at KCRAR. I was bright-eyed and bushy-tailed, and now I'm very jaded and a little bit more gray, so good to be back.
That's good. So give everybody a quick reminder of what your role with the association is.
Yes, I'm the SVP of Government Affairs for KCRAR, so I handle principally most of our lobbying, legislative activity, as well as all the fun PAC side and regulatory matters.
Awesome, very good. And so you get to spend a lot of time with friend of the podcast, Jeff Carson.
That is right. Yes, Jeff has been an interesting guy to get to learn over these past 7 to 8 months now. Wealth of knowledge, certainly not short on opinions, but great guy all around.
Definitely not short of it. That's why Jeff and I get along so well. We bounce opinions off of one another and get into heated disctions.
Oh, I feel like those could go on for quite some time I had to guess.
Those do go on for a while. There are podcast episodes of that if you have several hours in your day that you want to use for such things. Well, last time you were on, like I say, it hadn't been that long, but has anything changed? We've got some things we're going to talk about today, but for you, any new life updates, anything crazy happening in your world?
No, my world is pretty static on the personal side. On the KCRAR side, we've continued to make a lot of inroads into policy development. I think the very first time I came on, we talked about how our new forged public policy committee is going to be focusing solely on policy crafting, making sure that we have solid backgrounds for all of the major issues related to the real estate industry. We've been incredibly productive in that regard. We've produced 4 going on 5 different model ordinances. We've been sharing those with local governments. We have had wonderful feedback. And I will tell you, in the Realtor Association space, almost no other local board is performing this degree of policy work. So I think we're standing out as an organization in that regard, and I think we're going to see some real good policy changes in the coming year.
Can you give us kind of a rundown of what those model ordinances have looked like or what they've been about?
Yeah, so we've covered 4 topics thus far. So at the beginning of January, the board had adopted their first ever set of legislative priorities. It's kind of the key issues that we as an organization are going to be focused on in the coming year. So for 2026, so far, we've covered short-term rentals. Of course, with the World Cup and it being such a prevalent policy topic, we wanted to come out of the gate with that one. We've covered attainable housing, insurance, property taxes, which of course you can imagine that sparks some debate within our committee. It's a very loaded topic, but we're moving on to green building and infrastructure in that regard coming in the next week or so and making a lot of progress.
Interesting. I know that there's been a small amount of controversy maybe regarding attainable housing down in Overland Park. And for any members that might be wondering, can you talk a little bit about some of the are they the portfolio homes that Overland Park has put in place? And I think there's maybe some lots that are going to have those put up in South Overland Park. Is that accurate?
Yeah, that's 100% accurate. So that's something we've actually been pushing in conjunction with the city. So they had asked for our help in trying to promote that program. And really the long and short of portfolio homes is trying to inspire infill development. So these are smaller lots where traditionally you probably can't get a good ROI on a market rate home. By using pre-approved building designs to offset some of those initial costs to developers. And the goal is to target attainable housing. Now, attainable housing in Overland Park versus other jurisdictions is going to look a lot different. So we're not talking about small-scale homes in the $250,000, $300,000, $100,000 range. This is going to be more at the $400,000 range, which I know for some listeners, they might think, well, that's not attainable, but it's all relative, Alex. You know that. For Overland Park, that is considered an attainable home.
Yeah, certainly. And in some of these areas, we're talking about $400,000 houses that are around 1.2 to 1.5 or even higher houses.
Right? No, you're 100% right.
Yeah. I guess one of the things that we could talk a little bit about on that front is how we ended up engaged with that. So you said that the city had engaged us for assistance on that. What did that look like?
I mean, simple. We have a great relationship with the city of Overland Park, and we have always kept apprised of whatever they're doing on the policy space, and that's something they thought we would have an inherent interest in. They know that we as an organization champion attainable housing, so they had reached out to us, had asked for our support in just really spreading awareness, making sure that all of the ordinances that enabled this type of legislation and practices, asked that we support them, provide testimony. So we were more than happy to oblige them in that regard. And we look forward to seeing these projects be carried out. They're doing a little bit of a pilot program. They're looking to do, I believe, 6 to 12 different projects by the end of this year. And I'm looking forward to seeing what they come up with.
Can you tell us a little bit of the terms of that? I guess it was a model ordinance that we helped them craft, and then we retained to provide to other municipalities. Is that right? Is that correct? Or tell me a little bit about how we were involved.
Sure. So they had created the language themselves. So really, our model ordinance is for attainable housing writ large, not the portfolio homes program.
Okay.
Theirs was a specific set ordinance just focused on these 6 to 12 small-scale developments. Really, mostly what we did was provide testimony, provided expert input from the realtor industry about how could this look, how do we potentially see this playing out, is there an interest for these types of homes? That was largely our role.
I see. And in previous things that we've championed surrounding attainable housing, for instance, the Habitat for Humanity project that isn't too far from where the spot in South Overland Park that we're talking about, I think theirs is in Olathe at like 159th Street. But I'm curious, with that one, it can never be used. Those properties can never be used as a rental, and there's a land trust that they're sitting on. It's a pretty unique structure for our area. It's all over the country, but it's unique for our area. With these, are there certain provisions that make sure that they can be used for owner occupants primarily, to make sure that they are used for attainable housing and affordable home ownership, or could they also be used as rentals?
I don't believe there were any provisions within the ordinances they passed that had those stringent requirements. So they didn't take the Habitat for Humanity approach or go the land bank route or anything along those lines. So I think their primary objective was to get market rate developers to construct these versus kind of going the more philanthropic path that you're alluding to. So no, they didn't really have those parameters baked into place.
I see. Because you're right. 400,000 is it's affordable, but it's still up there, right? And I think were there some lending opportunities for people that were in specific trades or with specific employment? Is that correct?
I don't recall that. That is certainly potentially the case that there could have been some targeted workforce housing provisions. I don't recall that being part of the conversation, but certainly that could be something they're exploring. I'm simply not aware of.
I see. Okay. Because I wonder if somebody could put something like that up and then decide to use it as a rental instead of actually making sure that it becomes owner-occupied housing down the road. I'm certainly not against rentals, right? I own rental property myself, but at that same token, I think that it's important that when we're talking about affordable housing as a real estate association, that we're talking about owner occupancy, right?
Absolutely, and I think the city, with such a focus on affordable housing, I imagine that they do have the wherewithal, and they have a great team over there, that they are going to take the necessary steps to make sure that it is owner occupied. Whether or not the initial draft or proposals have that baked in, hardened to the language, I'm sure somewhere along the lines, whether it's administrative procedures, you name it, there's going to be some safeguards.
Very good. Okay, so attainable housing. And then what were the other ones again? What else? What other model ordinances have we worked on?
So it came out the gate with short-term rentals. Then we shifted to attainable housing. After that, we switched over to property taxes, and most recently, we covered insurance.
Insurance. Okay, and then you said something about green building. Is that right too?
So green building is on the horizon. We are just now starting that process, so we have nothing set in stone at this time, but when the committee convenes here in the coming weeks, we will be focusing on that topic.
Insurance is certainly a heavily discussed thing right now as the cost of insurance has gone up and people's escrow payments on their insurance bill has almost become more cost prohibitive in some ways than their taxes. It's really interesting to see that go up and see how it's impacting people, especially in our senior communities. So can you talk to us a little bit about what the discussion on insurance was about?
Yeah, so Alex, I mean, you know this as well as anyone that insurance is largely regulated by the state. It's not a federal role, it's not a local role. It is chiefly kind of like the real estate industry, right? Largely, a lot of those rules come down from the state. So it's a difficult thing to address from the local government perspective. The recommendations we are making is how do you offset some of those costs to homeowners? How do you make sure that they can stay insured and stay in their homes? So it's simple things such as having your code enforcement or someone in your building division go out and inspect roofs pro bono, perhaps offer offsets at local level, incentives just to offset general insurance costs. It is a very difficult thing for local governments to tackle, which is why you don't really see a lot of local governments in this region really focusing on this policy. They just hope that the state will take steps to address it, but there are small-scale things that local government can do. But at the end of the day, it's really going to be Topeka and Jeff City that handle these issues.
Yeah, interesting. Very good. Well, I'm glad that we're engaging it in any way that we can at the local level. I think that that's a really positive thing. I know many people personally who have been harmed by rising insurance prices and also rising insurance deductibles and changes in policy altogether. So I think that that's a really great thing. Let's jump in and talk about short-term rentals. So as you mentioned, one of the model ordinances that you guys went the first one that you launched was surrounding short-term rentals, partially because of World Cup coming to town. And one of the things that we also talked about last time was our funding of a study on short-term rental and the economic impact. Is that accurate?
That is 100% accurate. So we set off on this journey back in January. We wanted to get a good snapshot of what short-term rentals look like in the KC metro marketplace. Because if you look at what's publicly available as far as the data, there's just nothing comprehensive out there. And you have a lot of local governments trying to legislate on an issue that they just don't have enough information about. And we thought this is such an awesome opportunity with the World Cup coming up and all of these local governments being so honed in on this matter to really step in and be a thought leader on this and provide that data so they can make informed decisions. So we just recently got the research results within the past 2 weeks. It took a little bit. Big shout out to NAR, MR, and KR. This would not have been possible without their support. So we're very excited about it, and I'd love to discuss those details.
Well, tell us about it. So the focus was on economic impact primarily, right? So what is the economic impact of short-term rentals?
Yeah, so
what do we need to know about this?
Yeah, absolutely, Alex. So it is a very small subset of the actual lodging inventory overall. So you might think that, looking at the number of articles coming out or the number of ordinances being passed related to short-term rentals, that it's this massive market share when it's not. It's about 11% of all lodging options within the KC metro.
And when we're saying of all lodging options, what do we mean by that?
Hotels, motels, resorts, pretty much anywhere where you can stay and pay for the evening, we're going to be considering that a lodging option for the purposes of this study.
Okay, so and you said 11%.
11%.
And so that 89% is every single hotel room and every other lodging option that in Kansas City in the metro area?
That's right. I mean, it's a very...
Is it just Kansas City, Missouri, or what was the geographic provisions here?
Yeah, so it was 6 counties, 10 municipalities that provided a pretty good snapshot of what the KC metro, and you could even say the greater KC metro, represents.
Okay. Wow. So breaking that down to numbers, so that 11%, how many units is that?
So that is currently 4,300 active units.
4,300 active short-term rental units right now.
That's right.
And okay, wow. That's a lot of hotel rooms, but it isn't nearly enough, is it?
No,
when
it's
you
certainly
think
not.
about the 89% that's left, and you kind of figure out how much that would be. What is that? So you said 11% was how many?
11% was 4,300 active units.
So 35,000 hotel rooms then that are available, and it's obviously important then to make sure that we have some additional lodging opportunities if we expect to continue to get things like the World Cup here in Kansas City. So that's interesting. So 11% of the lodging options are short-term rentals. All right, what else do we need to know?
Yeah, so they have grown pretty tremendously since 2019. That was the starting point of the study just right before the pandemic. They have grown 125% in that time. And of the 10 municipalities, this is interesting in particular, 9 of those have seen a resurgence since COVID and the pandemic era. So they have reached peak levels that they had enjoyed prior to COVID around 2019, 2020. The one exception to that is Kansas City, Missouri.
Interesting.
They have never rebounded to their peak levels.
Interesting. And we can, I guess, draw to the assumption, maybe this is what you're getting ready to say, that that's because of their strong restrictions on short-term rentals?
That is absolutely correct. So in 23, they had put in place a number of very stringent regulations surrounding short-term rentals, including, and I think this would shock a lot of people, you cannot operate an STR in a residential zone.
Without petitioning the neighbors, is that correct?
That's correct.
Yeah. So you can, but you have to go through
very,
a process.
very almost insurmountable odds at that point, because typically, there's a lot of misunderstandings about STRs and how disruptive or they are not to neighborhoods. So huge hurdle to overcome to operating an STR in Kansas City. So after 23, their numbers dropped by 20%. They have never enjoyed the same degree of tourism dollars or STR rates since those regulations were put into place.
Interesting. Okay. All right. What else?
Yeah, so again, it's a very small subset of overall housing if you look at the numbers. So one of the key issues that we always hear about when we're talking about STRs with whether it's residents, realtors, local governments is that, well, it's going to eat into our affordable housing, our market rate housing, and it's going to cause first-time home buyers or people looking to downsize to not have access to inventory. But it represents 0.4%, 0.4% of all housing inventory across the KC Metro. So it is a very small subset.
Okay, let's define that a little bit more. So you're saying of all single family homes, it represents 0.4%.
That's
currently.
correct.
Is that what you're saying?
That's correct.
Okay. I do think that when we're talking about opportunity for first-time homebuyers, when we say that 0.4% of them are short-term rentals, and we're talking about all of the housing in Kansas City, it might be better to talk about just the houses that are available for sale, right? So when we say 0.4%, what is the number of units that is again? It's that 11% figure, which was how many?
That was 4,300 active units.
4,300 active units. And of course, the amount of inventory that's available for sale at any given point is not too much more than that, right? When we're talking about single family units in Kansas City. And I know that that's not exactly an apples to apples, but I do think that it's a little tricky to talk about it as the entire housing stock combined. Did we boil into that at all any more, or what else did we have about that?
Well, another note I would add kind of on the, let's say, housing availability or affordability front is that the study did look at how does this drive property values in neighborhoods? Because one of the concerns is that you're operating what is a quasi-commercial enterprise in a residential zone. You're going to cause property tax assessments to shoot up, potentially price people out of their homes to the property tax issue. There was no ever direct link established when the study looked at that particular factor. So that's another concern you often hear is that, well, you're operating a short-term rental, you're going to cause my assessments to go up, I'm no longer going to be able to afford to stay in my home. There was never a link that was able to be established through the study to definitively say that was the case. And really, when we're talking about property tax assessments, it has to do more with other issues versus short-term rentals.
Okay. I want to go back to affordability really quickly. What methodology was there anything else that they looked at on affordability to determine that short-term rental investment doesn't impact like attainability, I guess is what we want to say. Attainability or impact the available housing stock, or that investors aren't necessarily directly competing with first-time home buyers or people that are looking to purchase typically lower-priced inventory. Was there anything else that they dived into or dove into? What's the verb there? It doesn't matter to me. But I'm curious, was there anything else that they looked at surrounding attainability?
Nothing in addition to what we've talked to. And again, the two major points that they focused on was what is the current share of the overall housing supply and how has it impacted property values within the neighborhoods where they're geographically located. So those were the two primary factors that they assessed when looking at this.
Okay, interesting. Because I do feel like one of the biggest pushbacks is, especially right now, when we're talking about the fact that we have limited inventory, we're doing things like making sure that we have attainable housing in South OP, and we're championing different policies like that, and then turning around and saying, but we don't necessarily know for sure if we've made it so that only owner-occupied people can purchase those homes, and also we might be okay with those being short-term rentals, right? It does seem like it removes some of that potential increased housing stock. Obviously, short-term rentals are going to be very profitable for people, especially with how short we are in units, like you just described. They're going to be profitable for people. They're great opportunities for making money for investors, as long as municipalities are open to that. Right? So people are going to be, there should be a huge demand from investors on this. If people catch on to that, right, and the numbers are what we're discussing here, of course it seems like we would see a lot more offers from potential short-term rental investors, which seems like it would impact other buyers and make things more competitive for them. But I assume that there's an answer to that.
Yeah, so I would say this. So first of all, I should have said this earlier. If you look at our short-term rental marketplace, it's very comparable to the rest of the Midwest. So I just want to throw that fact out there.
Okay.
I feel as though if this had caught on as a great concern as it relates to attainable housing or investors, you would probably see other places like St. Louis, Omaha, taking more proactive steps to address the affordable housing short-term rental link, which, again, the study failed to establish. I will say that, if you look at Kansas City, Missouri, they put in place the most stringent short-term rental regulations. And partially that was due to the fact that they said it could impact affordable housing. Mm-hmm. But if you look at 23 to now in 26, how has their affordable housing stock increased? It really hasn't all that much.
Well, and I guess that would be my question, and that's what I would want to see alongside it, because that's a perfect way to look. Like, have they retained some affordability that the rest of the marketplace has not, based on that policy? And I'm curious if we've got numbers on that, because I think that would be a great way to really gauge it. I'm a little bit surprised that in that study that wasn't something that they looked at.
Yeah, I think that, we covered such a broad geography and such a range of issues that we couldn't dive into every single point we probably ideally would have wanted to. Now, I think that's a fair point. But no, I think that if you talk to developers, you talk to realtors working in the KCMO marketplace, there has been no sort of correlation between those 23 regulations being put in place and increased affordable housing stock in the Kansas City proper.
We should figure out what those numbers are and publish them.
That would be interesting to see.
Well, I think it's really important, because that is really the gauge of whether or not it impacts affordability.
Absolutely.
To me, it is anyway. I think that's a lot more clear. But what is the shortage of short-term rentals, and how many short-term rentals would we need to get into the available lodging stock that you talked about before in order to meet perceived demand?
Well, it really, that's a difficult question to answer, Alex, because as far as perceived demand, that ebbs and flows so much. Right now, you are enjoying almost a revival in short-term rentals in the KCMO marketplace, or I should say KC Metro marketplace with the World Cup. What that demand looks like a year from now, once FIFA has packed up and left town, it's hard to say. So I think that you're going to see a decline towards the third and fourth quarter of this year. Demand might resurge with another event. I think short-term rentals are very driven by large-scale events.
I see.
But if you look at our marketplace in particular, we're largely a regional destination. The vast majority of visitors to KC Metro for short-term rentals are people within the greater KC Metro already.
Interesting.
It could be a family getaway a couple of counties away. It could be, cross-county business. You're going to a conference in a city, that's one over from your own. So there's that factor. And we talked a little bit about, investors potentially being interested in short-term rentals. One of the interesting stats on this is 90% of the short-term rentals in the KC Metro are owned by people who live in the KC Metro.
Oh, of course, yeah.
So
yeah.
these are...
It's easier to manage that way.
It's 100% easier to manage. And the other 10% are all within the continental United States.
Sure,
and I know we live in a time where we talk about foreign investors and foreign property ownership. We did not find a single property within the KC Metro owned by anyone outside of the continental United States. So
interesting.
It's just a fun fact to throw out there. And most of these people, because this is one of the big things we hear all the time, is that, well, you have these LLCs registered in Delaware who are buying 5 or 6 properties. 95% of these STR operators own one property. So these are people who have secondary income. They're using it to help their kids go to college. These are your neighbors who are trying to help pay off their own mortgages. It's a small business opportunity.
They purchased one thinking that it would be easy because Bigger Pockets told them that it was a great idea. Shout out to Bigger Pockets. That's a podcast. Somebody told them that it would be a great idea, and they realized that it's harder than it looks. It isn't easy money by any means. One thing that happens a lot with short-term rentals, and I know that we've certainly seen this with the World Cup. You have people that have typical year-long leases, and then when that lease comes up, based on the World Cup, they might decide that they aren't going to go with a long-term lease until the World Cup is done, and they might convert to short-term rental short-term because, as you mentioned, the demand for short-term rentals ebbs and flows. So I'm curious what the study did to account for the fact that most short-term rentals, I think that this is accurate, I assume, most short-term rentals that we're going to see, especially right now, weren't short-term rentals a month ago, right? They probably aren't always short-term rentals, and they are often maybe have long-term leases, and then they convert to short-term rental based on demand. Did we do anything to account for that data in this study? And also, I'd be curious to know what percentage of these short-term rentals do transition to short-term rental only in moments of high demand.
Yeah, I wish I could answer that for you directly, not being part of the research team who saw that very kind of niche, granular side of the methodology. I wish I could answer it. But if you do look at the growth pattern over time, I mean, it did increase pretty steadily since 2019. So as far as the number that have just suddenly gone offline as a long-term rental and suddenly switched to short-term rental, I don't know if the pattern is reflective of that. I think this is something that has been building gradually over the past little over half decade, I would say, certainly dropped during the COVID era. But I think it's just a growing market trend that regardless of the World Cup was naturally occurring.
I see. Okay. And that's interesting. And with short-term rental being as, like I say, demand is going to go up and down, do we have maybe a baseline of where we want it to be? Of how many units we want to see? You said that we don't know what like the perceived demand number would be, but do we have a goal for how many short-term rental units would be a healthy number to see in the Kansas City area?
I mean, as an organization, or me personally, no, we don't have a goal. We just want property owners to be able to respond to market demand. So I see. It all is so dependent. I mean, it is one of the more ups and down, ebb and flow cycles for rental properties, a short-term rental. So I wish I could just land on a number and say, yes, we need 30,000 units across KC Metro, and then we will be golden. We will have the best tourism lodging economy possible. But that would
be so nice.
It would be nice. I wish there was a silver bullet answer for you, man. But it's just so dependent on just all sorts of market conditions.
Well, and I suppose that if there was consistent demand, we would see more hotels in Kansas City, Missouri.
You would think so.
You would think, or in Overland Park, right? If we had that consistent demand already, we would have enough lodging because capitalism. That's the way that things roll.
Yeah,
right?
I think we're getting dangerously close to having a conversation about how much of a tourism destination is Kansas City.
Well, and that is a question, right? So when we're focused on short-term rental and I had one more question before we go into this piece though. How did we determine the number of short-term rental units that are in Kansas City? Did we just look at Airbnb and see like Airbnb, Vrbo, and these like common sites and gauge that? Or is there another way that we're not aware of because this is interesting data for anybody to be able to pull to determine the number of short-term rentals in Kansas City?
Yeah, so they certainly did look at your traditional, your Airbnb, your VRBO, your public listing sites, but they also use data from an organization called Lighthouse, which kind of tracks short-term rentals across multiple platforms and captures those that might be a little harder to find on your more public-facing Airbnbs. So part of this study, and this is really interesting, is it's not only capturing those that are registered to do business with the city, because a lot of municipalities, they require you to register. This also counts a lot of those that are unregistered, so those who are kind of conducting business, maybe not the way you should, but conducting business nonetheless.
Got it. Okay, I want to get into economic impact, but part of getting into economic impact is talking about how viable Kansas City is for a long-term tourist destination, right? We're talking about FIFA a lot right now. Maybe one day we'll be talking about a Super Bowl when the Chiefs Stadium gets to Kansas and we've got a dome and all this stuff, right? Who knows what else we might see in Kansas City that will make it a stronger tourist destination. And as it becomes more of a tourist destination, I assume that will increase the overall economic impact of Airbnb. But you had mentioned this. I guess that's a good question. What do you see as something? What do you think that Kansas City is right now a strong tourist destination?
I think that we are making great progress towards being what I'd call a global tourism destination right now. And look, this is my 8 months of living in the Midwest perception, so take everything I say with a grain of salt.
Yeah, how far did you grow up from Disneyland again, or Disney World? I mean,
40 minutes.
40 minutes from Disney World. So I mean, we need to understand that you grew up 40 minutes from Disney World, and your idea of a tourist destination, you're kind of spoiled.
I could be skewed.
You're a little spoiled.
For sure.
So what do you think about Kansas City?
Look, I really enjoy Kansas City. I do think the city has so much to offer, but our tourism cycles seem to be very, cyclical in nature. It seems to be, just like when we're talking about the short-term rentals, driven by events, whether it's, World Cup, whether it's the Super Bowl, things along those lines. It's a lot of sports tourism is what it seems to come back to. I just don't know if we have the right fixtures at this point in time when we're talking about the tourism economy to continue to draw people year-round. I don't think that we are an evergreen 24/7 tourism economy, but we're getting there. I think that the city, things they're doing with the streetcar to increase accessibility and make it easier to move around through their transportation systems, we're making progress, but I think it's going to be a little time before people are coming here year-round.
Okay. Do you think that Kansas City, Missouri, is going to look at this information and change their mind about short-term rentals?
That's a great question. And, I think that it's difficult to say at this point in time. We have just introduced this information to them, so we have not received feedback as of yet. I'd love to maybe tell you that in a week or two, what kind of response I hear. But I think that the data speaks for itself, but oftentimes, this when it comes to local governments and their decision-making, politics and ideology get in the way.
Yeah.
So I think the data is very clear as far as the economic benefits, how regulatory barriers could impact and potentially hurt communities trying to operate in short-term rentals and impact your overall tourism economy. Whether that data matters, that's going to be up to the folks on that dais making those decisions.
If Mayor Quentin Lucas was right here with us today, what are the 3 things about this study that you would point out to him that might change his mind?
Yeah, great question. I know the mayor is very passionate about affordable housing. I really appreciate that about Mayor Lucas. I would say that if you look at the stats of this study, there has been no definitive link to how it impacts housing affordability. And I don't see any correlation between the 23 regulations the city put in place and a massive increase in affordable housing inventory. I think that you need to look that as a KC metro area, short-term rentals bring in over $600 million per year in economic impact, whether you're talking about people shopping at your local businesses, the short-term rentals themselves. It all has a spillover effect, as you know, Alex. And look, at the end of the day, it's a very small subset of housing inventory overall. I think that if you continue to put in place good regulations, that you can control that growth in a responsible manner, but still allow residents to take advantage of those economic benefits. And I guess a fourth thing I'd add, I know you asked for three. I'm going to give you a bonus here.
Fine.
If you look at the part of the study, did a public opinion poll. So they had sent out surveys to residents across the KC Metro. And people, by and large, support the practice. And part of the issue with short-term rentals is anytime this goes before local government, you have a packed town hall of neighborhood groups or people who say, I don't want this in my neighborhood. That is not what the survey revealed at all. Most residents support them with reasonable regulations. And that is the same approach we as an organization take. We know that you can't just allow them to operate freely without any kind of guardrails. But if you have those guardrails in place, most of your residents are content with that. They understand how it benefits their local economies, how they themselves benefit from it through the sales tax revenue, through the lodging revenue. So I think that would be a fourth point I would throw out there.
I think that fourth point is extraordinarily important, and I think that it's really important to understand that as an association, we are generally against the government telling us what we can and can't do with private property, and that's been an idea that realtors have championed for forever, right? I mean, that's something that's very, very important, and I also think it's important for our listeners and for everybody else to understand that saying that we don't think that the government should regulate usage of private property is not necessarily the same as fully endorsing a practice, right? Like I think that those are two very different things, and I think that as an organization we should always be strongly opposed to the government telling us how we can use our property. That is a extreme slippery slope, and I don't love slippery slope arguments in general, but that one really can become that, right? As soon as we allow the government to say exactly what we can and can't do with our property beyond just basic zoning and things, but just blanketly banning a practice that may or may not really be harming people, right? I think that that's a huge risk. So I appreciate the fact that you're having these conversations. I think that it is very important to continue to have these conversations and to make sure that different use cases are available. The public is going to decide what the public decides. Right? The public is going to decide whether or not they like this practice. We're going to find out more about affordability if short-term rental usage actually continues to increase. I think that we could take a look at Kansas City, Missouri, and very easily determine whether or not it actually improved housing attainability. I think that one could argue that for every home that didn't sell to a short-term rental investor, it probably went to an owner-occupied investor, right? We could probably make that argument. And so it might not be fully accurate, but you could look at it that way. So I think that there's more data that we could get in order to really rein this in and figure out exactly what we're looking at. I'm curious. We've talked about usually when we talk about economic impact, there's usually a number tied to it. So is there a number tied to our economic impact?
So as it relates to short-term rentals, the study found that on an annual basis, they contribute $600 million to the KC metro economy.
That's huge. And that $600 million, I assume, boils down to several buckets, right? So in that lump sum, how does that break down? It's obviously we've got direct rent, right? And that's there, but how else does it benefit?
Well, largely the bulk of that's going to be related to just your sales overall. So a lot of these people coming into the marketplace, contributing to local businesses, going to tourism venues. Okay,
so it's tourism primarily.
Right. So that is the bulk of that. Moving away from just the overall economic impact, if you look at the state and local sales tax side, it's a $34 million bucket per year through lodging taxes, through sales taxes. So there's a benefit for both the general public as well as the local and state governments for STRs. Again, despite being such a small share of the lodging inventory overall.
Yeah, and there's a usually a multiplier effect or something like that they tie to it, basically saying that for every dollar that's spent, it really equates to 3 or 4 added to the economy. What was the percentage? Do we know what the percentage of that breakdown was that applied to that multiplier effect?
I don't have it in front of me, but
the breakdown.
Certainly can get that to you.
Okay, yeah, I think that would be interesting. When we talk about economic impact of a realtor in Kansas City, the National Association of Realtors, and if you're a longtime listener to this podcast, you know that I love this report. But the National Association of Realtors every year puts out a economic impact report talking about the economic impact of a single real estate transaction, and it's always interesting to see in Kansas and Missouri, how much of an economic impact you as a realtor contributed if you've been involved in 10 sales, figuring out how much of an economic impact that was and the role that you played in that is always really interesting. But when they break that down, they break it down into these different buckets, and one of them, I think it's called the multiplier effect, but yeah, it's this idea that for every dollar that's contributed, it really equates to 3 or 4 because of how that gets distributed downline. And it's always really interesting. Well, I can't wait to see this report. Is it going to be published for our members to see?
Yes, so it's actually already on our website. So if you go to KCRAR.com, you go to the advocacy section under the Policy and Research tab. It's already there. It's live, so you can review it now. You can certainly draw your own conclusions. And if you have any questions related to the study, whether it's the methodology or the findings themselves, always feel free to reach out to your advocacy team. We're here to help.
Awesome. Well, James, thank you so much for being with us today, and I look forward to diving into this study. I hope our listeners dive into this study, and thank you so much for all you do, especially with this, making sure that private property rights are advocated for in these local governments, that's such critical work, and KCRAR has always been strong in that, and I appreciate what you're contributing to those efforts as well.
Well, very much appreciate that, and thank you for having me on this morning. It's been great.
Thanks, James.